Warren Buffett is one of the most successful investors of all time. With a net worth of over $100 billion, he has made wise investment decisions that have paid off greatly. In this video, we'll be examining the top companies that Warren Buffett is invested in and what makes them so valuable. So sit back, relax, and get ready to learn from the master himself.
We own 5.5% or a little over percent of Apple. It's probably the best business I know in the world. And we own 5.5% of it. And that is a bigger commitment that we have in anything except insurance.
Apple is one of the most well-known and valuable companies in the world. It's also one of Warren Buffett's top investments. Buffett is well known for his investment philosophy, which prioritizes the purchase of strong, reliable companies with a competitive advantage in their respective markets. Apple fits the criteria perfectly. With a reputation for producing high-quality products, a loyal customer base, and a long history of innovation and growth.
I do not focus on the sales in the next quarter or the next year. Hundreds and hundreds and hundreds of millions of people who practically live their lives by it. And if you look at that little piece of whatever it is, you've got hundreds and hundreds of millions of people with loads of buying power and able to do business or learn information or whatever it may be, part of their habit of living. I mean, they spend hours a day and it does all kinds of things for them. So that real estate is worth a fortune.
In 2016, Buffett made its first investment in Apple through Berkshire Hathaway, acquiring nearly 10 million shares. Since then, Berkshire Hathaway has continued to increase its stake in Apple, making it one of the largest shareholders in the company. Apple has proven to be a strong investment for Berkshire Hathaway, with its stock price rising dramatically in recent years. In addition to its strong financial performance, Apple's brand and customer loyalty provide a competitive advantage that sets it apart from its competitors in the technology industry. Overall, Apple's long history of success and its continued growth potential make it a valuable addition to any investment portfolio. And it's no surprise that it's one of Warren Buffett's top investments.
For a different purpose by a different manager months earlier, he bought roughly 15 million shares of Activision. But then on January, 17th or 18th, Microsoft announced they were going to buy Activision for $95 a share.
Activision Blizzard is a leading player in the video game industry, with popular franchises such as Call of Duty, World of Warcraft, and Candy Crush. The company has a long history of delivering engaging and immersive gaming experiences to millions of players around the world, and it has a strong track record of generating consistent and predictable profits. Warren Buffett and Berkshire Hathaway first invested in Activision Blizzard in Q4 of 2021, only a few months before Microsoft announced that they would be acquiring the company. Buffett has also noted that his interest in Activision also hinges on the monumental Microsoft deal that transformed it into an even more valuable asset.
Value depends not on what the market price does, but whether a given corporate event occurs, an announced corporate event occurs. Microsoft wants to buy Activision, we'll say it. Well, they said at $95 a share.
Since then, the company has been one of the fastest growing holdings in the Berkshire Hathaway portfolio. Berkshire Hathaway has steadily increased its stake in Activision Blizzard over the years, and it now holds a significant portion of the company's shares, about 60 million shares. Activision currently makes up almost 2% of Berkshire Hathaway's holdings as well. One of the reasons that Warren Buffett is so bullish on Activision Blizzard is its position as a leader in the fast-growing video game industry. The company has a strong brand and a loyal customer base, which provides a solid foundation for future growth. Additionally, Activision Blizzard has a proven business model, as well as a well-established distribution network, which makes it easy for the company to reach its customers. If there's anything Mr. Buffett looks for in a company, it is definitely company reach and structural integrity. Activision Blizzard has both of these on total lockdown.
Very, very powerful marketing organization. Sold 0.7 billion cases.
One of Mr. Buffett's most successful investments is Coca-Cola. The billionaire investor first bought shares in the beverage giant in the late 1980s, and today, Berkshire Hathaway is one of the largest shareholders of Coca-Cola. Coca-Cola currently accounts for about 8% of Berkshire Hathaway's portfolio, which is worth about $25 billion. And Mr. Buffett has publicly emphasized that he will never sell any of his shares.
400 million shares of Coca-Cola stock, as you know, we've never sold a share. and I wouldn't think of selling a share.
What makes Coca-Cola such a great investment for Mr. Buffett? The so-called Oracle of Omaha has described Coca-Cola as a wonderful business with a strong brand and a wide-reaching distribution network. The key to its success is its strong branding, which is recognized and trusted by consumers around the world. Coca-Cola's products are sold in more than 200 countries, and the name has become synonymous with high-quality, refreshing beverages.
Quite the inevitability that you would get in the soft drink business with a Coca-Cola. I guess the 1886, so it'd be about 111 years to get to the point where they are, and the infrastructure is incredible, and I wouldn't put it quite in the same class in terms of inevitability. That doesn't mean it can be a better stock investment depending on the price.
In addition to its strong branding, Coca-Cola also has a highly efficient distribution system. The company has a massive network of bottlers and distributors that reach far and wide, ensuring that its products are always readily available to consumers. This distribution system is a key factor in the company's ability to generate consistent profit, allowing Coca-Cola to reach a large number of customers without incurring high costs. It is a prime example of Buffett's ideal company choice, with a proven track record of delivering consistent, reliable returns to its shareholders.
I wouldn't think of the credit card business as a one model business any more than I would think of the car business as essentially being one model. I mean, Ferrari is going to make a lot of money, but they're going to have just a portion of the market. Well, Amex, growing around the world with individuals, is growing around the world with small businesses.
American Express, or Amex as it's often called, is one of Warren Buffett's favorite investments. Berkshire Hathaway has been a shareholder in American Express since the 1960s, and the company has become one of Berkshire's largest holdings over time. Buffett has described American Express as a company with a strong franchise and a valuable brand that provides a competitive advantage in the financial services industry. He has also noted that American Express has a proven track record of delivering consistent returns to shareholders, which is important to his investment philosophy. Despite its long history of success, American Express has faced challenges in recent years, including increased competition in the financial services industry and changing consumer habits. However, Warren Buffett and Berkshire Hathaway remain confident in American Express's ability to overcome these challenges and continue to deliver value to shareholders in the future. Occidental Petroleum Corporation.
Did you do this because you're betting on the oil industry or the Permian Basin or on oil prices, or is this just the terms of the deal itself?
Well, the oil prices are the big determinant over time, obviously. If you're in oil, same thing is true if you're in copper price. So oil prices are enormously important, but I was familiar with Occidental and generally familiar with.
Warren Buffett's relationship with Occidental Petroleum dates back to 2019, when Berkshire assisted Occidental in financing their $35.7 billion acquisition of Anadarko Petroleum. At the time, Berkshire acquired warrants to buy 83.9 million shares of common stock, in addition to $10 billion of Occidental preferred stock. Since Buffett's first investment, Occidental has distributed a dividend to Berkshire of approximately $800 million every year, split between stock and cash. OXY now makes up a little over 4% of the portfolio, with almost 200 million shares held. With a market value of almost $12 billion, it's no surprise that the company's success in the energy industry is a beacon that attracted Mr. Buffett. Mr. Buffett has a history of investing in energy companies, and OXY fits into this category.
We will put a lot of money into energy. Our record will be looked at, and there'll be nothing like it in the energy business.
The company has a strong portfolio of assets, including conventional oil and gas reserves and large-scale chemical operations. While OXY may not be as well known as some of Warren Buffett's other investments, it is a key player in his portfolio. Its strong management, efficient operations, and focus on cost control make it a valuable addition to any investment portfolio.
Why banks right now?
They're businesses I understand, and I like the price at which they're selling relative to their future prospects. I think 10 years from now that they'll be worth more money.
Mr. Buffett has an interesting affinity for investing in banks. The billionaire investor says that in the next decade or so, investing in banks will pay off tremendously. Bank of America is another one of Mr. Warren Buffett's top investments. Warren Buffett invested in Bank of America during the financial crisis of 2011. At the time, the banking industry was facing a major crisis, and many banks were struggling to stay afloat. However, Warren Buffett saw an opportunity in Bank of America and decided to make a significant investment in the company.
Well, I have a decidedly different view on European banks and American banks. The American banks are in a far, far, far better position than they were 3 or 4 years ago. Taken most of the abnormal losses existed or that were going to manifest themselves in their portfolios from what's now 3.5 or 4 years ago. They've buttressed their capital in a very big way.
Warren Buffett believed that Bank of America had a sound business model. Even in the midst of the financial crisis, the company was well positioned to weather the storm and emerge as a stronger, more resilient institution. Warren Buffett's investment in Bank of America has been highly successful. About 11% of Berkshire Hathaway's holdings are in Bank of America, which is valued at $34 billion. Bank of America is one of Warren Buffett's top performing investments, and it's easy to see why. Berkshire Hathaway has a healthy affinity for companies in the energy industry, and for good cause. Chevron is another one of Mr. Buffett's top investments, making up a whopping 0.8% of the Berkshire Hathaway portfolio. Being one of the world's largest diversified multinational energy firms, Chevron is second only to ExxonMobil in terms of market share in the United States. A long time ago, Mr. Buffett saw that the energy sector was poised for growth in the years ahead. The world's population was growing, and the demand for energy was only going to increase. By investing in Chevron, Warren Buffett was able to take advantage of this growing demand and position himself for long-term success. Warren Buffett's investment in Chevron has been highly successful. Since making his investment, the value of the company has steadily grown, and today, Berkshire Hathaway is one of the largest shareholders of Chevron. Chevron currently accounts for about 9.4% of Berkshire Hathaway's holdings, which is worth about $29 billion. The energy sector has continued to grow, and Chevron has been well positioned to take advantage of this growth. The company has made a number of strategic investments and acquisitions, which have helped it grow and expand its operations.
Heinz makes sense because we've got a business we like, and we've got a partner we like, and we've got a price that I barely like. But we've got a great business, and that's the most important thing.
Warren Buffett first invested in H.J. Heinz Co. in 2013, assisting 3G Capital in its acquisition of the company. The Berkshire Hathaway CEO saw that the company had a strong brand and a long history of profitability. With its impeccable business model, far reach across the world, and an ever-growing list of products, Kraft Heinz was the perfect target for Buffett, so he took it. This food and beverage powerhouse was formed by the 2015 merger of Kraft and Heinz, bringing together two of the industry's most renowned brands. It is based in both Chicago and Pittsburgh. He was also involved in the merger with Kraft in 2015, despite the fact that Mr. Buffett had been upfront with investors in saying that Kraft Heinz has not been one of his best investment selections. Since making his investment, the value of the company has steadily increased, and today, Berkshire Hathaway is one of the largest shareholders of Kraft Heinz, owning about 26.6%, which is worth over $13 billion. We hope you enjoyed watching this video and learned a thing or two from one of the best investors, Warren Buffett, and his top investments. Thank you for watching, and do not forget to like and subscribe. See you at the next one.